Hey everyone, welcome back to Corporate Decoder, where we break down the financial jargon so you don't have to. And today we're dissecting a report that smells a bit like, well, let's just say they're showing off some recent financial statements. We've got Kennedy Wilson Holdings releasing some interim financial results, and we're going to tell you what it all means before we dive in. If you like getting straightforward, no-nonsense financial insights like this, make sure you're subscribed to the channel. Also, we've got a fantastic community over on Discord, linked in the description below, where we discuss these filings in real time. So this filing is an 8K report, which is basically a way for companies to announce big news that investors need to know right away. Think of it as a press release filed with the SEC, the US securities regulator. Companies use this to tell everyone about major events. The date here is August 20, 2025. That's our timestamp for when the key events in this report happened. The company we're looking at is Kennedy Wilson Holdings, Inc. They're a real estate investment company. Think of them as folks who buy, own, and manage properties, often large chunks of them, like office buildings, apartments, or shopping centers. They often have a global reach. They're incorporated in Delaware, a popular state for companies to set up in. The other numbers are just their official identifiers, like a social security number for a business. Their main office is in Beverly Hills, California. Fancy? Now this is interesting. They check the box for accelerated filer and large accelerated filer. What does that mean for us? It tells us they're a pretty big company, probably with a significant market value, and they have a history of filing on time. This usually means they have robust internal processes for financial reporting. And importantly, they are definitely not a shell company. A shell company is basically a company with no real operations, often used for shady purposes or as a vehicle for mergers. Kennedy Wilson is a real operating business. Their stock trades on the New York Stock Exchange under the ticker symbol KW. So if you want to buy a piece of this company, that's where you'd look. This section, item 7.1, gets right to the heart of the filing. It tells us about something called Regulation FD Disclosure. FD stands for Fair Disclosure. This rule from the SEC makes sure that when a company shares important non-public information, they have to share it with everyone at the same time, not just a select few people like big investors. So here's the main event. On August 20, 2025, Kennedy Wilson Europe Real Estate Limited, which is a fully owned subsidiary, posted its financial reports for the first half of 2025. They did this because they have unsecured bonds, which are basically company loans, and the people they borrowed from required them to share these financial updates. They put these updates on their website to follow the rules of those loans, and the report we're looking at includes those financial results. Think of Exhibit 99.1 as the actual financial treasure chest we're about to open. This part is a bit of legal fine print. It's saying that this information is being shared, but it's not being officially filed in the same way as some other reports. This means they're not taking on the same legal responsibility for this specific information as they might for a full annual report. It's a subtle but important distinction in the world of SEC filings. They're being careful about how this information is legally treated. This is where they list what's included in the filing. And here it is, Exhibit 99.1. This is the actual report of Kennedy Wilson Europe Real Estate Limited, covering the first 6 months of the year ending on June 30, 2025. IFRS means International Financial Reporting Standards, which is a common accounting framework used globally. It's like the universal language of accounting for many countries outside the US. This last exhibit, 104, is about the digital format of the filing itself. Companies now have to file reports in a special computer-readable format called XBRL. This just tells us how they've organized that data, essentially making sure the digital report is properly tagged. And finally, the signatures. When you see this, it means someone official within the company, in this case the Chief Financial Officer Justin Embody, has signed off on this report, confirming they believe it to be accurate to the best of their knowledge. Here's Justin Embody, the CFO, putting his name on the line, and the date he signed off, August 20, 2025. Let's get to the meat of it. While this filing is brief and mainly points to the financial statements as the core information, the fact that it's published is significant. Kennedy Wilson Europe Real Estate Limited is a key part of the overall Kennedy Wilson Holdings business. What we're seeing here is a snapshot of their performance in the first half of 2025. Without the actual numbers from Exhibit 99.1 directly embedded in this 8K, we have to infer the impact of those statements. The very purpose of posting them is to comply with bond covenants, meaning they likely met certain financial thresholds or reporting requirements that their lenders needed to see. If they hadn't met these, it could have triggered alarms for their lenders, potentially leading to higher interest rates or even demands for immediate repayment, which would be a huge problem for the company. So the positive spin here is that by posting these statements and filing this 8K, Kennedy Wilson Europe Real Estate Limited is demonstrating to its bondholders that they are on track and meeting their obligations. This maintains confidence with their lenders, which is crucial for a company that relies on debt financing, as many real estate companies do. Think about a real estate company like Kennedy Wilson. They often use borrowed money or debt to buy properties. They then aim to generate income from those properties, like rent, which they use to pay back the debt and make a profit. So when they issue bonds, they're essentially taking out a large loan. Those bond agreements will have what are called covenants, which are rules the company must follow. The fact that they are posting their interim IFRS financial statements means they are likely in compliance with those rules for their unsecured bonds. This is good news because it means they haven't tripped any alarms with their creditors. If they had shown a significant loss or a drastic drop in certain financial health indicators, their bondholders might have had cause for concern. While we don't have the specific numbers from the interim report here, we can assume that the key figures within those statements would have been positive enough for the company to feel comfortable publishing them as required. For a real estate company, critical numbers to watch in such reports would typically be rental income, occupancy rates, property valuations, and their overall debt levels relative to their assets. A strong showing in rental income and stable or increasing property values coupled with manageable debt would be a sign of good health. Conversely, declining rental income and stable or increasing property values coupled with manageable debt would be a sign of good health. Conversely, declining rental income and stable or increasing property values coupled with manageable debt would be a sign of good health. Conversely, declining rental income, falling property values, or high and increasing debt could signal trouble. Since this filing is more of a notification that the financials are available to satisfy bond requirements, it suggests that the European real estate segment, which is a significant part of their business, is performing in a way that meets the terms of their debt financing. This is an important piece of the puzzle for investors trying to understand the overall stability and financial management of Kennedy Wilson Holdings. It's a signal that at least one major part of their operations is on solid footing with its lenders. So what's our take? Kennedy Wilson, through its European arm, is showing it's playing by the rules with its lenders. This isn't a flashy announcement of huge profits, but rather a quiet yet important confirmation of financial responsibility. For a company that leverages debt, keeping bondholders happy and compliant is paramount to its ongoing operations and its ability to raise further capital. It's a sign of operational stability within their European real estate portfolio, which is a crucial component of their overall business. While this filing doesn't give us all the juicy details of their financial performance, it does suggest that their European real estate segment is meeting its financial obligations under its bond agreements. This is a good indicator of financial discipline and a responsible approach to managing debt, which is essential for any company in the real estate sector. We'll be keeping an eye on their full quarterly reports for the deeper dive into the numbers, but for now, this is a tick in the positive box for Kennedy Wilson. Alright, that's our quick decode of this filing. What's your take on Kennedy Wilson's approach to managing its debt and investor relations? Let us know in the comments below. If this analysis was helpful, please smash that like button and subscribe for more corporate breakdowns. And don't forget to join our Discord community for more real-time insights. The link is in the description. Thanks for watching, and we'll see you in the next decode.